Hi, hello, welcome back to this YouTube channel, and the tax series 2 is here for your learning pleasure. I remain Clementina E. Ukiri, Esquire. You're welcome back. Thank you all so much for my viewers and distinguished friends who took out their time to see the tax series 1. Thank you so much. And I made a promise that I was going to complete the personal income tax rate structure, which I needed to dig deep on for more clarity. Here it is. So this tax series 2 is a continuation of the personal income tax and all that pertains to it, particularly the rate structure of how the percentage for which taxes are calculated, for clarity. Thank you so much and welcome back. So, without further ado, the tax rate is in a table that is applicable to all employees in Nigeria, particularly in our instance in Lagos. However, I wish to clarify that as it relates to personal income tax, it is a singular table that applies to all the states of Nigeria. So there is no saying that, oh, Lagos state taxes, personal income tax is higher than other states. No, because there is only one law that provides for the table of a personal income tax, and it is applicable in the entire federation. In the Personal Income Tax Act, Cap P8, Laws of the Federal Republic of Nigeria 2004, as amended in 2011. So the tax rate is the same all over. Recall that from our last 30 at 30, we made it clear that for remunerations, for earnings in 1 year, in the 12 calendar months that are 200,000 and below, the tax rate applicable to that sort of earning is 1%. So ordinarily, the 10% of 200,000, if one was earning cumulatively 200,000 for 1 year, 10% is 20,000, right? So now that we're talking 1%, that is 2,000 naira, will be the calculation for such an earner's annual tax. That is the way it goes. For earners, whether you're a business person, you're a sole proprietor, you're working for yourself, or you're working for someone and you are on salary, if your annual salary is above 300,000, let's say 301,000, the taxable rate to that sum will become 7% automatically. However, let me stop there for now and take us a little bit back to a certain clarification. There is some form of a relief allowance that is not taxable in our incomes or earnings. Is a consolidated relief allowance. Consolidated would simply mean put together, merged together, and then when you remove these tax-free allowances, the remainder, whatever is remainder after deductions of these allowances, will become the taxable income. Now the following deductions are tax exempt. 1, National Housing Fund contribution. So if from your salary you are into the scheme of contributing for your housing scheme, the money you contribute, maybe your employers has made it such a way that, okay, all employees contribute some money into the purpose of buying a house, that money will be removed from your salary first before they talk about taxing the remainder. And that is just one of it. The second exempted earning in your exempted part of your earning is any contribution that is toward National Health Insurance Scheme. So if you were to be a subscriber to NHIS, Reliance, or any of all of these health insurance scheme, that sum annually that you remove from your salaries or your earnings is not part of the taxation. It's exempted. 3. Life assurance premium is also an insurance, a type of insurance that insures you at death. So this is a kind of a third party can claim from this insurance. For instance, if I were to assure my life that when I die, to pay my family this certain sum of money to compensate them for my demise. You see? So that money that you spend from your earning, your salary, your income toward this is also exempted from the taxation. Same thing goes to the National Pension Scheme. So if you were to earn annually, let's say 200,000, and you are contributing 7% of that from your salary, then your employers are contributing maybe 10%, of course, for your pension scheme. That money, that 7% you're contributing annually as your pension is not part of taxation. Then your gratuity, the money that you're keeping aside, or the government is keeping for you, or your employers are keeping for you, or even you are keeping for yourself, that immediately I retire at old age, I'm going to reward myself with this. It's a payoff, kind of a payoff of gratitude from that word, right? You've served well, you've done well. So that emolument payable to you by your employers, cumulatively forming part of your salary as it were, are not taxable. So let's say you are earning 200,000 in 12 months, and then you remove all of these deductions. Then after removing everything, I realized that what is remaining from 200,000 is 120,000. It is that 120,000 annually that will be taxed. And of course, because the 120,000 is less than 200,000, is 1% annual taxation. So I hope that is clear enough on that. However, now going forward, we now understand that the table of taxation begins from 1% for salaries or earnings less than 200,000 annually. When it's 7%, 300,000 and above, 301,000, 7%. You see? Now, for subsequent 300,000, the taxable rate for the extra 300,000 on the initial 300,000 that is usually taxed at 7% is now 11%. So let's say annually you are earning 600,000. The first 300,000 will be taxed at 7%. Then the 300,000 on top of that one will now be taxed at 11%. That is the way it goes. You can calculate it yourself, right? So you don't cheat the government. Then you can have the effrontery to also hold the government accountable. This is by the wayside. So let's not go political. Let's just concentrate on the purpose of this 30. Now, for the subsequent 500,000, let's imagine that you are earning 1,100,000. The first 300,000 of that money will be taxed 7. The next 300 will be taxed 11%. Then the extra 500,000 will be taxed 15%. Now, after that 500,000, If you're not earning more, like 300,000 extra on top of that 500,000 cumulatively in 1 year, you are a big man. Let's do the maths. 300, first 300 plus 300, 600 plus the next 500, 1.1 million naira, and then you now add 300,000 on top. That is 1.4 million. You're a big man. Your tax is growing wings. So now this extra 300,000 on top of the other 500 will be taxed at 20%. So you see, the richer you are, the bigger your tax, the bigger your legal obligations to the state on a normal situation, right? Now, next 1.6 million naira that you earn, you are the oga of them all. So that next 1.6 million will be taxed at 21% on that money. You see? So if you now go and say, you are not the oga at the top, you are earning annually, apart from that 1.6 plus the first 1.4, you are now earning extra 3.2 million. My sister, your tax is 24% of that money. You see? So it's quite, that is it for personal income tax. And don't forget, remember that you can only tax the personal income when you have removed your allowances, which is called the Consolidated Relief Allowance. You've removed all those ones. So anything that remains is what you will tax. It's something that the employer of labor, which is employers, right, are required to strictly comply with this tax structure, unless a new one is issued by the Joint Tax Board. I hope that is clear enough. Now, when they say tax reliefs allowances, an employee enjoys certain reliefs allowances which are normally deducted from salary before the balance is subject to tax. The Consolidated Relief Allowance really is 200,000 or 1% of gross income, whichever is higher, plus 20% of gross income. We mentioned life assurance, you remove is non-taxable. Pension contribution and all other allowances paid to disability allowance is a flat fee of 3,000 naira or 20% of earned income, whichever is higher. So 20% of all your earned income, if one is a disabled person, you'll be entitled to that money. So if 20% of your annual income is higher than 3,000, then that one is out of the tax. You're not going to be taxed on it. So imagine you're earning 200,000 annually and then one is disabled. You're deaf, you're visually impaired and all of that. Calculate 20% of 200,000. How much is that? Right? 10% is 20,000. 20% is 40,000 or 3,000, whichever is higher. Of course, 20% is the sure banker, right? Now, however, apart from these tabulated or government approved allowances, every other allowance paid to an employee is taxable. For example, Christmas bonus, 13 months salary, and some of those allowances, they are all taxable, right? So the ones that are exempted are a creation of the law, not at the whims and caprices of anyone. Do you get it? So some questions which I would want us to go on with. Why confirm if taxes deducted from my monthly emoluments are remitted to the state government? How do you confirm? Because it's officially obtained this information on all taxes paid on your behalf from any of the LIRS. You have your taxpayer's ID. I have mine. In fact, myself, I will just call somebody in LIRS. Please, sir, see my tax ID, check for me. Are they making remittances? Am I up to date? And they will just confirm. When you walk into it, they will just check for you and give you the update of when remittances were made last on your behalf. You will know, right? So, and that is that. Then there is another question that pops up. Is it necessary for a full-time housewife or other jobless persons to pay tax to the Lagos state government or any state of Nigeria for that matter? The question remains that, can you give what you don't have? Will you pay the tax with what exactly? Don't forget that personal income tax is based on your earnings and income. So if you are jobless, you have no business of your own, you are a full-time housewife, the pocket money given to you by your husband is not a taxable income, because that money most likely has already been taxed as by personal income. So that is his gain. You are benefiting from him. You are not working. So why the general rule of law is that everyone who is working, who is earning salary, income by business or whatsoever, must pay personal income tax. That is an exception to full housewives and jobless persons. This is expressly stipulated in the third schedule of the Personal Income Tax Act 104, Cap P8, Law of the Federal Republic of Nigeria, as amended in 2011. Yes, if you want to check it as a lawyer, go on third schedule, you'll see it there. Now, another interesting question. What is the difference between payee and direct assessment? Payee simply means pay as you earn. This is for salary earners on a monthly basis. So immediately you earn, you deduct before the 10th of the next month. Remember our last series, your employers are supposed to remit. Or if you are doing your own business but you pay yourself salary, there's a way very rich people, they make the arrangements. You can do the remittance, pay as you earn, payee. But direct assessment is for self-employed individuals. So payee is for individuals under a paid employment, and direct assessment is for self-employed individuals. So payee and direct assessment are two ways of assessing individuals to tax. So let's expatiate a little bit on the self-assessment as a method of operation. For direct assessment, it is a situation where you will assess your own tax based on the table. Self-assessment filed is also subjected to review from the respective state internal revenue board. They may decide to say that this one is calculating this or tax. Are you sure this thing is correct? Because your assessment will also be based on what you declared as your profit as a business person. Like, okay, apart from this is my profit, right? This is my profit. This is what is coming to me. This is my earning. This is my income, right? So when you declare that, you now assess yourself based on the table. Now let me just outline the procedures for self-assessment. Collect the self-assessment form from the head office or any area revenue office nearest to you. They're all around, or you Google. 2. Complete the form honestly, indicating your actual income for the relevant years of assessment. You see? Then indicate the correct tax you should pay based on the approved self-assessment tax table. Also, any bank, any designated bank, and pay the money either by cash or transfer, and make sure you collect an electronic receipt instantly. Having done that, payment could also be made in cash. I mentioned that, or by checks, or by bank draft. This designated bank accounts are stipulated by the state internal revenue agency. It differs from different states. Yeah. Then when you have done that, having assessed and you have paid, the revenue will review to ascertain the correctness of the assessment, and may either review the assessment upward or downward. The process of direct assessment filing has been automated by many states of internal revenue agency in Nigeria. Hence, online processing of this is available depending on your state of residence. It is also important to know that as a sole proprietor or a director of a company registered with a business name status, the tax clearance for the sole proprietor or the director suffice for the business organization. So that is fair enough. So what they are saying is that as a proprietor or as a business name owner, that is a business name. The law is clear that a business name has the same identity with the proprietor. So if I were to say Clementina Ukiri & Co, and you want to sue me, maybe you've done something relating to my law practice, you want to sue me, you can just go on and sue Clementina Ukiri & Co. Who will show up in court? It's me, because that's a business. Or you just sue me directly. You see? So we are one and same person. So if I were a good taxpayer, paying my personal income tax, it covers my business name, because my business name and myself, we are the same. I'm the one running the business. So if I'm going to pay my personal income, at the end, the money that the business earns is coming to me, is my income, is my salary, however I want to do it. Do you understand? So when I'm remitting and paying my tax in accordance with the law and the table that is provided, my tax clearance is the tax clearance of the business name. The tax clearance of the business name is my tax clearance. That is the way it goes. So thank you so much, so very much, for keeping with me once again today. I enjoyed our interaction today. As usual, if you have any question, send it to my email. I'll be leaving it on the screen. If you have some comments, you can comment down below in the comment section. Don't forget to subscribe, like this video, share it among your friends and colleagues and family so that we all can learn something new. Thank you so much. I remain your girl, Clementina Ukiri Esquire. Bye for now.